Hello, 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 everyone. Happy Monday. How is everyone doing today? Are you ready for this week? I hopefully am, but don't feel like it. Oh, finally got to bed last night. Completely fell asleep. One of my dogs came in, started squeaking. Have to get up and take her out. Oh well, that's the feels like the way it's going to start the week. Hope everyone had a wonderful, restful evening. Good morning. I'm already in afternoon mode. I skipped the day. Good morning, Patrick. Good morning, Jake. Yes, thank you. Everybody is well. All the doggies are good as well. That is my family. Good morning, Martinez. Hey, Waka Waka. Welcome back. Haven't seen you in forever. Boy, now do we tip bullish or bearish because Waka's back? Hope you are okay, Waka. Good morning, Josh. Good morning, Anissa. Hope everything is wonderful over there. Thank you for tuning in, as always. Really appreciate it. Good morning, Options 22. Thank you, thank you. Good morning, Sterling. How's the car biz going, Sterling? Ah. Royal Palms, thank you. Oh well, we got the crew in today for super busy week. Ending the week, what is it? 3.6 trillion in options expiration on Friday. Oh, VIX up today. Looks like volatility, at least the volatility is getting jacked. If I was a market maker still, I'd be asking a little more for volatility. Because volatility just isn't for the downside. Remember that. You know, there are plenty of times when, as a market maker, hey, I need to raise my prices. Well, how do you raise it if your prices, if you're a market maker, to cushion against extreme moves either way? You raise volatility. You raise the implied volatility component because that's the only thing you really have control over in the option pricing model. So, VIX way up today, going into a super volatile week. Not necessarily today. Not necessarily today. Very little stuff. 10 a.m. Central Consumer Inflation expectations, meh. Very minor, and then nothing. But market's sort of mixed. Little mixed in healthcare. Oil, very mixed. Exxon up, Chevron. I did not see. Does anybody have news? Chevron down 446 basis points. Does anybody have any news off Chevron? I have not had a chance to do that yet. But oil trying to find a little short-term bottom in here. Other than that, Lowe's getting hit a bit. Down 381 basis points. Wow, HD up. Oh, this is like a pair trade morning. Pair trade morning. Sectors, energy, the strongest, followed by utilities, weakest basic materials, but nothing off the charts strange right there. So be watching for some continuation of energy into the open if crude finds its bottom. Also, natty gas looking like it's up again after filling the gap last week. Oh, I hope it doesn't get too cold over in Europe with all. I think there's still going to be some major heating issues. You know, everybody over there. I hope that we don't get some major Arctic blasts coming in with the way things are positioned. That will not be good. All right. We got Jay Powell Wednesday with the Fed Reserve and, more important, the meeting after announcement press conference, 75. So it's been trading between roughly 75 and 80. So, but this is what I'm expecting, and I think this is what pretty much the market's expecting. I think we'll see concrete after the CPI. I don't think they're going to change it no matter what. But I think after CPI, if CPI isn't really strange, you'll see this go like to 90%. Fear and greed in neutral mode. We're pretty much coiling. By the way, before the open, not much. After the close, Oracle. By the way, the pattern in Oracle is not a double top. If we have some time, I'll pop into that chart if somebody reminds me. But that's really all I'm watching after the close today. All right, so let's get back to the, there we go, daily chart. Car business is in neutral. Well, fantastic. So the VIX isn't, I'm not the one who said it's broken. It's a little wonky because of all the short dated option trading right now, which if the VIX really wanted to get fixed would have to take into account, because we have so much, 40% of the volume is ODEs. 40% of the option volume is ODEs now. You know, and the VIX doesn't really take into account ODEs. But you have longer dated stuff, and you're still going to see. I never said the VIX was broken. It's just a little wonky. Somebody else said the VIX was broken. I think you said the VIX was broken, Coco. Wednesday will be crazy. France plays World Cup. FOMC at the same time. Now, this determines the traders. If you're tuning into France for the World Cup, or you're with JPOW for the post hike comments, which are you, or you're gonna have one screen on one screen on the other. It's gonna separate the traders from the non-traders. Good morning, Dave. So we shall see. Real quick little pullback overnight, the 39.55 area. Nothing's really changed. Nothing's really changed. You know, nothing's changed. We had the little open down here and retesting the lows, running up. So I'm just going to sort of do bigger picture. I'm still, this morning, 39.95 to 4K is my breakout area. Breakdown area 39.55. I'm more expecting choppy conditions. So I'm prepared to not get chopped up. With CPI tomorrow, not much on the radar screen today. A lot of people will be adjusting their portfolio positions on a shorter term basis. We have cycles at the bottom still turning up. And remember, weekly cycles at the top and turning down. So we have mismatched cycles. Now, once this daily gets to the top, and then we're going to have to see for the rollover. Although I have so many people that I'm talking to positioned very bearishly, would not be surprised. Again, I gave you my levels yesterday. The key level for me to get bullish is longer term bullish, more medium term going into the end of the year. I guess you call that medium term, is on a closing basis above 40.37, which is the 200 and the 62.5 harmonic. Anything on a breakout play would be very short term bullish. The breakdown play is this 39.55, but that's only for a retest of the 50 and the low area that was established back on the 17th of November and the 8th of December. We start breaking down from there with either intraday momentum or a key close below that. Then I'm shifting to more medium-term bearish. So those are my key areas, and I'm not planning on getting chopped up other than that. NASDAQ, inside bar from Friday from the overnight. Key, my minor level, my very minor, we have dueling clusters here. Very minor, I'm watching about 1760 on the breakout, and that's only to, 11,760. Then I'm targeting 11,814, then 11,882, but I'll close above 11,874 is when I shift to bullish mode. Boy, I can't talk today. And watching for then a retest of December 1st highs. My breakdown play, I'm going to be watching now Friday's low for intraday. Then my target area is about 11.6. Then it is 11.475 to 11.5, and we close back below 11.465, tips me into medium-term bearish mode. So I got that. Other than that, not planning on getting chopped. We'll get to the spiders and the Qs real quick. Dow, not an inside day, but holding the rotation zone. My key area for a breakdown play is about 33,625. For a retest of 33,475. We get a close below 33,475. Then I'm talking about 33,200 roughly, and then the 50, which comes in at 32, just behind 33,000. So 32,901, 900. That's the area I will target for the breakdown. On a rally, intraday is going to be 33,929 as a breakout level. And then I'm looking for the gap open on Friday, 34,037. My key line in the sand, the high on Friday was 34,199. I will pay attention to that, but my key line in the sand on a closing basis is 34,240 for a retest of December 1st high area. We just get through to Russell. Russell, remember, did trigger the double and is just drifting lower. First target, 11,777. Roughly, no, it's really 11,778, 11,777.9, 11,778. Declining rotation zone. The Russell's the first thing I'm turning to for bearish price action. Why? It's triggered a bearish pattern. Then I'm following that up by the NASDAQ as my second one for the bearish. For bullish, my two I'm looking at first are Dow and S&P. On any rally, you have the prior breakdown area from triggering the double top and the declining rotation zone. And we have a couple significant levels in here. And look where they line up with the rotation zone. So even on a rally of 1822 to 1832 does not change anything. Now, spiders and the Qs. Spiders going to be a gap up from Friday. It's closed. Friday's close coming in 393.28, 394.49. Now, on a pullback, would just be for the gap fill first, the 393.28. The breakdown area for intraday is roughly about 391.65. And that's only for a retest of about 390.40. 390.40 is my key level. 390.40 is key, especially if we get a close. That's my breakdown level on the spiders that I will be focused on a close. If we get a close below there, I will be watching the open from the 10th of Thursday. That was CPI Thursday, which the open is 388.05, and then the low 385.64, and then we have the gap fill, not just to the open, but for the full close. So those are back from the Wednesday. So those are my key levels to the downside. Upside gets a little easier for the spiders. We have these two top areas, 397.60. 397.60 takes me into very short-term bullish mode. Okay, very short-term bullish mode. I'm just going to flip these harmonics around from this last sell-off also, because above this 390, what would I say, 397.60 area, my key target, hold on, let me clean something up in here. My key target area is 437 to 482. The flipping area for me is 403.12 on a closing basis. That's where we sit there. For the Qs, on my closing basis, this one's easy, 279.17. The double is confirmed but not triggered, so that's my key level. Right now, we closed 282.04. We're trading 282.74, so any pullback, I will be targeting 282.04. And then there's not a lot of great breakdowns, but I'll be keying off about 280.50. We get below 280.50, I'm focusing on the lows from December 7th coming in at 278.78. All right. To the breakout upside, I'm using Friday's highs. 284.88 is a warning sign, but I'm really focused on Friday's highs coming in at 285.64. My next target is 287.27, and the key line in the sand to flip me more of a medium-term bullish is 289.39 on a closing basis. Can take off this level too because we have the harmonic sitting right there. A close above 289.39, a retest of the December 1st high area. Good afternoon, Charles. Coop is ripping. Okay. I disagree. FOMC is more important than CPI. And not what they are hiking, what their guidance will be for the Feb 1st meeting. Any guidance is the most important thing this week, followed pretty much by the Bank of England, or ECB, and then we have the massive OPEX on Friday. CPI would actually be the fourth ranked thing. Now, CPI can have some volatility going in, but it's not going to change the rate decision, at least in my perspective, unless something really off the charts were to happen. But I still don't think they'd do it because they've been pretty good with guidance and sticking to the guidance. DAX, still key breakdown level 14.2, breakout area 14.4. Other than that, nothing going on. We break down. 14,001 is my target. The notes still watching for this double trigger. That's the only thing that gives me a decent trade right now. It's in no man's land, holding into the rotation zone. And by the way, the double still slightly lower probability because the daily rotation zone in the way, but the trigger point is 113.21.5. Dollar index. Inside to Friday, the double is still in play. The trigger point, 105.47 on a closing basis. Even on a pullback, the double's not invalidated. So my key pullback area I'll be watching if we have a dollar retest the lows, are between 103.91 and 103.69. Other than that, pretty much short-term sitting on hands. As I talked about before, VIX. Gap up today. This is getting priced with pumping up volatility because this is major volatility week. So the only thing I'm watching for a breakdown, especially if tomorrow, if CPI comes in cooler, we could see a somewhat drop in the VIX. But remember, this is pricing in a volatile week, not necessarily a bearish week. I saw a bunch of stuff out there this morning. This is incredibly bearish. VIX is up. No, this is pricing in volatility. Volatility because of this week can be non-directional. Don't get misled. It's pricing in volatility. Crude. Watching for this bottoming bar with cycles at the bottom and turning up against that key weekly target. Other than that, if there's any break to the upside, I'm just watching for a return to the rotation zone. Natty gas, huge gap up today against the 200. On a closing basis, we close up here. I'm watching for a retest of the end of November high area. Other than that, we start breaking down below about 675. Going to be using gap harmonics. Gold, still, this little mini double is in play. So that's the only thing short term I'm watching on gold. Unless we get a power breakout above about 1820. What else? Euro, we still have the double top in play. It's a little flattening out, but it is still in play even with today's rotation back up. So that's the only thing I'm focused on there. In the short term, same with the pound. Remember, again, Thursday ECB and Bank of England rate hikes. Bitcoin still in consolidation. Tesla looks like a little gap down. There's just not a lot of great patterns. I'm going to be watching Friday's low and high for any breakout, but any breakout on Tesla, my next target is 186.65 area. Breakdown below Friday's lows, I'll be watching for a retest of the low area. Other than that, there's not a great pattern. Yes, and the potential double bottom is still in play. Not expecting it to trigger, but we shall see. Oracle. This is not a double. What's interesting on Oracle, just want to point something out for any traders. I'm focusing on last week's low, With earnings, this is an advanced clear path down. This isn't advanced on the weekly. Okay, and key support areas about the 75.50 to 76. We break below that, it could get interesting to the downside in Oracle. But see, you have, if again I can draw them the right way, I need to take that off. We start breaking below about 75.60, could get interesting, especially with a retest of the 200. Other than that, you're holding against the breakout level. That's why this area is so key from last week. The breakout area you can see right here. So if they release better expected earnings, I'm going to be watching for a more substantial topping pattern on any gap up, with cycles at the top on the weekly. If there is a gap up, that will actually, I'll like that, because it could take the cycles back to the top on the daily. We could be setting up for a more significant topping pattern once we get a market rollover. Just so, whether you trade that or not, just describing my analysis to you, so we get to this coup. Again, Coupa after the close today is not one that I really trade, but first, second targets hit on the double, and that's really about it. And it's already now pre-market way above there. Oh, did they already release earnings? They released it this morning. Sorry, that is wrong. That is wrong. I need to make a correction. Coupa was not. It was, they have this wrong. It was before the open. That's the gap up. So that's done. Right now, trading against key resistance, was that a beat? Yeah. Beat would not chase. This is now gonna, I actually have to look at this for a potential rollover gap fill. That's not until it would break below 778 again. If it can't break below 78, it sits off the table for me. I got to look at this longer term. Yeah, I'll be watching at some point for a gap fill, not necessarily today, but the first thing before a gap fill would be a retest of the 200, about 71.50 area. Sorry, I didn't. They must have changed over their diagram was wrong. I thought it's not something I really trade, but I will pay attention to this now. That's where we sit, just looking at the going into the open. Yeah, if you're a micro trader, you start breaking below about 39.75, there could be a quick little trip down to about 39.68. That's about it. Thoughts on NVIDIA? Tempted to buy puts going into the close of the year? On NVIDIA, you're in this flagging channel. I mean, it would be an aggressive put play for me. You have, once this cycles get to the top, yeah, it's in a flagging pattern. Your problem is positioning of the puts. It's at least tagged the 200 again. Technically, it could see some more upside from a probability wise. I wouldn't be establishing a play just yet in that. Why? I wouldn't be even worried on a drop to 158 unless you're really nimble, because I'd be looking for the bigger breakdown on this. Other than that, it would just be trading back into very key support after a reaction to 200. Why I'm hedging is probability-wise says we could return to 182. So I wouldn't want to be fighting that in the short term, especially if we go sideways or hold up for a bit. I'm sitting on DK. I'm theta burning. That's my own thing. There's not a strong top pattern just yet. We do have stair-stepping divergence. That's the only bearish stuff. But for me to get overly bearish, we have to break below the flagging pattern. Yeah, just wait. You know, there are times, even if you go, and this is one of the things where I know what people would do. It could drop back down here. Oh, but I could have made a little on my put spread. Yeah, you have to be really nimble. This, I'd look for better plays because you got mismatched probabilities and it still favors some upside bias. So I'd rather find something with stronger probabilities. Here we go off the open. Then I actually have to jump. Just want to see where this is coming off the open. Let's just glance at the tick real quick. Thank you for tuning in, everybody. Nah, not a very neutral tick. Slight bullish bias. Slight bullish bias. Not strong either way, so don't get chopped. That's my advice. Don't get chopped. With that, you're welcome, Dave. Okay. I'll see everyone in the afternoon. Thank you for tuning in. Looks like we got a slight little bias to the upside. I'm going to be sitting on my hands are numb unless we get some real strong momentum. Bye for now. You are welcome, Charles. Bye for now.